Hey guys, AKIL'S here. Welcome back to another Weekend Trading Edge video. We're going old school this week, and we're gonna just hop in and look at as many trading opportunities as possible. The markets have been left in a little bit of consolidation, and following up on the lesson that we taught you guys in the Trading War Room workshop this past week, what forms during periods of consolidation? Well, advanced pattern formations, and I got a lot of them for you. Oh, and don't worry, although we're gonna look at a lot of advanced pattern formations, I'm gonna try to bring you a slightly different lesson with each of them. That way it doesn't get repetitive and boring, and this still serves educational purposes instead of just being like, here's a signal, here's a signal, here's a signal. Now, before we hop into the charts real quick, one of the reasons that we're seeing a lot of consolidation in the markets is because we have a very busy week of important stuff happening, and that important stuff is going to be monetary policy. We have Bank of Japan on Tuesday night / Wednesday. We have the FOMC, so the US on Wednesday, and then we have the Swiss National Bank and the Bank of England on Thursday. So back to back to back monetary policy decisions, and more importantly, the statements that come along with it, so we can start thinking into the future. Let's get started on the euro yen here, where we have a potential advanced pattern formation forming. Yes, words. So if I zoom in on this section right here, I'm here on the 4-hour, you're gonna see this little consolidative back and forth that has formed in the market. The market has spiked up, right? We had this nice little flag pattern breakout. We didn't break out too far. We came back down to retest, and we attempted to extend higher, and so far we have not been able to do that. You can see that previous structure has held. If we continue in this consolidation, right, maybe because Bank of Japan monetary policy coming out on Tuesday / Wednesday, we may see an advanced pattern formation form. And our initial move right here is going to be our X to A. This is going to be our swing low to swing high. I'm going to take my Fibonacci retracement and draw that out. So boom to boom, X to A, swing low to swing high. This move back down, this retracement is going to be my B leg, right? For you guys that were in the workshop, right? We came to the 618, which means we're on alert for Gartley Pattern, right? Our C leg does not violate or breach our A leg, so that's going to be valid. And we're going to look for a D completion. Again, different ways to trade these. You can go for the 786 or the 127, which is how we personally trade them, which should be right around here. Let me just see how close I am. If I take my Fibonacci extension tool from my A leg to my B leg and back up. Oh, spot on, right? Remember that story I told you about Todd Brown killing it on equities and day trading and being colorblind? Boom, I wasn't lying. So just for you guys that are new, just to see kind of the scribbles on here, I'll draw it on again. X to A is that starting point to swing high. A to B is that first retracement. B to C is that second one right here. A C to D is right down here. And we're looking for a bullish move from that area. Next up, we're going to go to the big brother, the pound yen. You can see a similar consolidative formation forming. Again, I got to get more words. I did it twice in a row already. I've got like 8 more to go through. So let's make it a drinking game. Whenever I say formation forming, you take a shot and see if you can survive through the rest of the video. But this one is going to be a little different, right? We still have our initial swing low to swing high right here. But this time when we measure our Fibonacci retracement, instead of coming to the 618, it only comes to the 50%. And what this does is it changes the pattern. Where it hits that 618, we're looking for a Gartley pattern. When it doesn't and it hits the 50% instead, we're gonna be looking for a bat pattern. That bat pattern has a little bit of a different completion point. We're gonna have an X to A right here, an A to B retracing back. Once again, our B to C retracing up. And then our CD completion is going to be down here at our 886. I didn't do this in the first one, but we always measure these in zones, where the 886 in this case is the starting zone and the X leg is the finishing zone. Now, something interesting here as well, we also have a butterfly pattern if you decide to take this as your starting point. I'm just going to draw it on real quick for time's sake here. But a butterfly pattern is going to look like this. It's a little bit different than our normal M and W patterns because it completes without the outside of the X leg. Excuse me. Long day, Friday night. Should be out partying, but instead I'm in front of the charts recording videos for you guys, right? But swing low to swing high, X to A. Retracement, A to B. Failed extension up, B to C. And then for the butterfly pattern, that D completion, we're going to look for at a 127 inversion. There's many different ways to do the butterfly pattern. You can do an AB equals CD pattern as well. That's something you're going to have to figure out on your own when you go through it. But you can see that butterfly is going to complete right near that bat pattern zone as well. So kind of a 2-4 here on the pound yen. And again, these are both bullish opportunities. Next up, pound yen. Next up, dollar yen. And guess what we have? More patterns. How did you know, right? Did I spoil it in the beginning of the video? We're going to take a swing high right here, swing high to swing low. This one has a few of them, so bear with me. And this is going to be our X to A. Once again, you can see our B leg comes past our 618, which means we're on alert for a wrong tool, potential Gartley pattern here. So an X to A, an A to B, a B to C, and a deep CD completion, I'm gonna say right here. And once again, let's see how good I am with predicting Fibonacci's. Swing low to swing high and back down. Yeah, got it again, right? This is gonna be one of my favorite Gartleys to trade because it is a deep Gartley. And what that means is it completes deeper in the zone. Now, why is deeper in the zone a good thing? Well, because that significantly impacts my risk reward, right? So if I'm looking at a shallow Gartley pattern, for example, one that completes right at the 786, right? My stop, if you remember the method that Jason showed you, taking our Fibonacci extension from swing low to swing high backwards and using this 113, my stop is going to be about right up here. You can see that risk reward isn't great. It is even inverse. However, this deep Gartley, right, as I complete all the way right here, actually, I should measure out. Sorry, I got to measure out my actual. I eyeballed it. I should measure out the actual target for that. There we go. It's still inverse, but just a little bit less than what I initially showed you. If we take this deeper Gartley, right, we complete a little bit higher. Our stop does not change. It's still the same, right? We're still measuring it from the same leg. So you can see our stop is a lot smaller. Our target will change a little bit just because our Fibonacci level is going to be a little bit higher with that completion point. But you can see the difference in risk reward here, where in the first opportunity, we're looking at what? Not even a 1-to-1, almost a 1-to-1, right? In the second opportunity, we're almost at a darn near 2-to-1 risk reward. So this is why I really enjoy these deep Gartley patterns. On the flip side of this, we'll keep the notes on here. We also have another advanced pattern formation setting up. Put that drink down, right? This one's gonna look like this: a swing low to swing high, X to A to B coming right in here. Let me go change the color real quick for you, make it yellow. B to C up here, and then if we were to retrace downward, that would give us a CD completion. So again, the cool thing is here is that we have this trade bracketed. Again, we have Bank of Japan monetary policy. There's no expected change, but we never know what they're gonna say as far as future guidance goes. But whether the market wants to shoot up or shoot down, right? I'm working on my sounds, right? We have an opportunity to get involved, and that's the cool thing about advanced pattern formations. We can kind of set them up and just wait for whichever one completes to complete. And while we're on the topic, something I mentioned to our traders in the workshop last week was that we were going through teaching different ways the market moved. We were talking about bullish trends and bearish trends and consolidation. And one of the questions, which is a very usual question that I get, was, well, what do we do during consolidation? Do we just stay out of the market? Do we avoid? Do we duck and run for cover? And I said, no, we can trade it. I know that many of us are taught the trend is your friend, and we think that we can only trend trade. We can only hop on directional markets. But understand that depending on what market you're in, well, first and foremost, understand that all markets go through consolidation. And depending on what market you're in, that consolidative time may be more or less. For example, the S&P is a highly directional index. It's going to trend like 70-80% of the time. However, in the Forex market, we're going to be in consolidation for about 70% of the time. So there's nothing wrong with having a method to trade consolidation. And especially in consolidation where we don't really have a clear bias of if we're going to go up or we're going to go down, right? The consolidation in its own right is the market trying to decide and determine what it's going to do next. It's perfect to have setups like this where we have a clear place on where we want to get involved at, or we have multiple opportunities to get involved and we're not just guessing one way or the other. So advanced patterns have been a staple of my trading, and during times like this where the market is kind of choppy, it offers a lot of opportunity, which equals a lot of profit. So don't be quick to poo-poo them either as a main strategy or an alternative strategy during when you can't use your trending strategy. Next up is going to be Dollar Canada. Now, Dollar Canada, this is an interesting one as far as lessons go, right? There are 2 advanced pattern formations here, right? Bravo if you can see them. But look at this. When we take our Fibonacci's to measure what they are going to be in some very interesting locations. Now, you can see that we have our X to A, right? Our swing low to swing high, our swing high to swing low, right? Getting long already. We have our A to B right here. And you can see that the A to B nearly misses the 618, right? So the question is, Akil, what do we do with this, right? It's right at the 618. It didn't quite touch the 618. Is it a 618? And the answer is no, right? It either hit it or it did not hit it. And this is the cool thing I told you about having rules, right? It's black or white. We either did or did not. Or if you are going to have a rule that says close enough, and there are some teachers out there that teach kind of buffer zones because we all know that exist in the market, just create a rule of what close enough is. If close enough equals 5 pips before, then it's still black or white, whether it's close enough. So although this is right on the 618, really close as I can get here, and I hope nothing is like up my nose or anything like that, it did not touch. So we're still looking at this as a potential bat pattern. So our X to A, our A to B, our B to C, and our C to D is going to be right up here at an 886 for a bearish bat pattern. If we flip the other way, we have a very similar circumstance as well. I'm going to get this out the way real quick. Let me zoom this up a little bit. And you're going to see that if we take this leg right here, swing low to swing high, and look at our B leg is extremely close to touching it, but take my word for it, it does not, because I measured this out and it misses by a few pips. Of course, Trade What You See, great book on advanced pattern formation. It's a great starter book if I can find it here while we're on the subject. Just do something and blah, 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 blah. Here we go. It took me ages to actually find this. Maybe I'll speed up like the searching process for you. But Trade What You See, I took the cover off because I went through a stage where I thought no covers made me look dignified and cool. But this is actually a really great book for beginners on not just advanced pattern formations, but just learning harmonic movements. So Fibonacci's, how to market moves, AB equals CD patterns. This is one of the first books that I read on technical analysis. And it is a great one. It's an easy read as too. So if you are new to advanced pattern formations, you're looking for a good read, Larry Pesavento, Trade What You See. Excellent book recommendation. Now it shall go back to being lost forever. One day I'm going to take you through all these books, man. I've done some podcasts on my favorite books, but man, there are some good ones in here that I haven't looked at in a while, so I need to go back through them. But anyway, just like the former case or the previous case, we do not hit the 786. So if we hit the 786, then we would look for a butterfly pattern. If we do not hit the 618 or 786, then it is still technically a Gartley pattern. And if you thought that previous Gartley pattern was deep, check out how deep this one is. This one's going to come right at the low, right? So let's again swing low to swing high, X to A, retracement A to B. Let's change the color here. Let's make it pink. That's a bad decision. That's not too bad. B to C, and then a CD completion right here. So again, you're looking at a risk reward on here. You are right by that X leg. You are entering at pretty much the lowest possible place you can enter at, which is good because again, it's going to give you a very tiny risk reward words, right? In comparison to what you would have got at a higher level. And again, risk profile is a good thing in trading, right? We're looking at something like this, bang, right here. 3-to-1 risk reward. Doesn't get any better than that. So 2 advanced pattern formations here. We have a potential bearish bat and a bullish Gartley. So next up is the pound Aussie, and this is going to be an interesting one because there are multiple advanced pattern formations here, but the lesson I want to teach you on this one has to do with a lesson that I'm going to give you tomorrow on episode, was it 1135 of the Trading Coach podcast. I'm going to spoil it, I guess, but it's titled My Most Important Indicator, and it is the podcast episode that you guys requested explaining the ATR, the average true range. And why that matters is because of this. First and foremost, let's get the small one out of the way just so you guys can see it. This one's actually getting close to at market. So you'll see swing low to swing high, X to A to B, B to C. Hopefully you're following along by now. And a CD completion right down here at the 886. So we may see this at the open. But there's another pattern here as well, and it's going to be called a Cipher pattern. The Cipher pattern is going to look something like this, right? We're going to have our X to A like this, our swing low to swing high. Sorry, I was using white charts the other day for a tutorial, for that video I actually just told you about. That's going to be our X to A. Our A to B is going to come as a retracement as usual. That needs to come to the 382, cannot close below the 618, or the 618, excuse me. I'm then going to bring out my Fibonacci extension from swing low to swing high to project my C leg. So in the other patterns, they all kind of stayed within the box. The C had to be within the A. In this one, the C expands beyond the A, right? And it gives us a pattern that looks something like this. X to A to B, B to C, and then a CD completion right about here. Let's see if I can go, 3 for 3, 4 for 4 of these predictions. Yes. This is why I'm a trading view wizard, right? If you go to my settings, wherever they are over here, and it says profile, I'm going to show some personal information. Watch, I know it. No, it says AKIL'S wizard. Insert hat in the video. We're looking at this, right? One method we talked about for using stop losses was the 113 Fibonacci inversion. It's a nice, quick, easy method. No math, no brain doing stuff, just drag it on. Another method is using the ATR, which is the average true range. And what I'm going to do is I'm going to go to my data box over here. I'm going to look at my most recent candle, which is right here. I keep forgetting it's Friday and we're closed. And you can see my ATR is 55, right in the bottom right of the corner. I'm pointing like you guys can see it, but the bottom right hand of the corner in blue, it says 55. What I would do with my ATR as far as to get the stop loss is I would take the low of my X leg, which is right here at 202.82, and I would minus 82, or take away 55 from 82, which is 37, right? Someone check me on that and leave it in the comment section if I'm wrong, right? But that's going to put me at 202.37 for my stop loss, right? Which means I'm entering right here. My stop loss is right here, right? Because this will be a 1 ATR stop. Now, here's something awesome. If we were to go down to the 1 hour chart, you can see that the pattern still exists, right? I think all of us would say like maybe it's a little bit cleaner on the 4 hour, but we can definitely see it here on the 1 hour. Nothing is violated as far as the terms of the pattern. The only difference is this. Because I'm on an hourly chart, a lower time frame, and we'll explain this a little bit more in tomorrow's podcast, right? My ATR is going to be smaller. So instead of 55, it is now 23. My X leg is the same. I forgot it already. 87, 82, right? So now it's 82 minus, I forgot that as well, 82 minus 23, which is going to be 59, right? Again, check me on that. It's been a very long day and my brain is mush right now, but I believe it's 59, right? So that's gonna put me right here. Again, my brain was mush, right? So you can see what that did was it significantly changed my stop loss, right? My initial stop loss was a whopping 115 pips. My new stop loss is less than 100 pips, right? And why does this make a difference? Well, historically, the Cipher has a very poor risk reward. Many of the times it's even going to be inverse. Well, Akil, why would you trade something that's inverse? I just saw the last episode of the Trading Coach podcast and you showed us the whole risk reward matrix that is probably on your screen right now. And it says inverse stop loss, bad. Well, inverse stop loss, bad only if win percentage not high. If win percentage high, inverse stop loss, tolerable, right? the Cipher has such a high win percentage that it can allow for an inverse risk reward and still be profitable. And trust me, as someone who requires a minimum of 1-to-1 on every single thing I trade, right? I would prefer more, but in every single thing I trade, I require at least a minimum of 1-to-1. And as someone who hated the Cypher pattern for many reasons, but one of the reasons was the inverse risk reward, I trade it. And the reason for that is that numbers don't lie, right? I won't go into the whole story, but the Cipher was brought to my attention. I was tasked to test it by the creator. I tested it, and one of the reasons he asked me, because he knew I was against it, and I would look for every single reason to fail it, and I could not, and it was so good. I said, hey, can I trade it too? And I've traded it for, I don't know how many years, 8 years, 9, 2014, I think it was, more, whatever, a long time. So it is okay if it works with your trading philosophy. Obviously, if it's something that you're not okay with, you have to make adjustments or just not trade it. But fact of the matter is, again, here's the difference it makes, right? So if we look at our kind of risk reward opportunities here, our initial one, right, on the 4 hour, our risk reward is going to look a little bit, initial risk reward is going to look a little bit like this, right? Less than 1-to-1. However, going down to the hourly with the smaller ATR, our risk reward is going to look something like this. Positive risk reward, right? 1 negative, 1 positive, right? Now, I'm not saying you should always jump down to a lower time frame just to make it work. We never want to force trades, but in this particular situation, it is valid on both as long as your eyes agree with it. But don't force it. Bad idea. Bad idea. AKIL'S says no. So I hope you enjoyed the pattern frenzy. There was like 4 more I want to show you, but guys, I am beat. We had a full week of workshop. It's Friday night. I'm tired. I've got soccer tournaments tomorrow. I'm ready to get out of here. But I would say this, 2 things before I leave you. One of the reasons that patterns are great for newer traders, and this was the reason that I went with patterns years ago as well, is because they are very easy to follow. I'm not saying they're easy to identify. It takes a lot of work like anything else, but they are very rules-based. And as a newer trader, many of us have problems following rules. Many of us have problems with discretionary trading, meaning giving ourselves the ability to analyze and make decisions in the market because we're just not psychologically mature yet. So patterns was the most black and white thing that I can trade aside from a mechanical system that still fit into kind of like that discretionary style of trading. So it still gave me enough freedom to kind of see it and view it with my eyes, but the rules were very strict. And discipline is something that I really needed at the beginning of my trading career. Also, I got a comment the other day, someone complaining about my YouTube videos because I teach the same things, patterns, price action, support resistance, and I should do things that are more flashy. Well, the truth is, right, patterns aren't flashy, right? Maybe it's flashy to you right now, but once you get used to it, it is repetitive and boring. But what did we say in the workshop, guys? Boring trading is good because boring is profitable. And understand that my job isn't here to wow you and go viral and do stuff for clicks and likes. If that was the case, I'd be stripping down every time a stop loss was hit or something like that. Or maybe that would scare people away. I don't know. I'd be doing something like that for clicks and likes. The truth is that's not my goal here at the channel, right? My goal is to help traders. I come from a situation where I was fortunate enough to find the right type of help very early on in my career before I lost too much money. And ever since then, ever since I made it and really changed my life, I made it my goal to give back as well. So yes, we have the business, we have tier 1 trading where we do charge for coaching and education, and we charge for it because we put a lot of effort into it, a lot of time and effort into it. And our services aren't free. They could be a lot more expensive, like back when we were doing private trading. But truth of the matter is we do these YouTube videos, we do the podcast because we want to give back to people that don't have the opportunity to perhaps pay for training or something like that. And we do want to leave a legacy of helping traders. So I got all mushy on you. Forget you ever heard that. I'm a man. I'm no emotions, right? But I do appreciate you guys. A lot of the fans out there, you guys have very nice things to say, and all of your nice things allow me to ignore what the trolly people say because it's like one of them to like 50 of you. So I hope you guys enjoy your weekend. Keep an eye out for that ATR podcast coming out tomorrow. Be safe in the markets next week. And until next time, plan your trade, trade your plan. Take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.